Hi traders, hi family. Today we are going to continue with our lesson, and we are going to touch some few things in the forex market. I would want just to confess this to you, to say before I came across this information that I'm delivering to you, uh, uh, I've lost quite a lot of money in the forex industry. I've lost quite a lot of money. I tried my best to apply all the strategies that I've been learning in the books. I think I've read minimum 100 books about forex, but still when I apply those strategies I found in the books, I was still able to lose money. Not until I came to discover these secrets that I'm delivering to somebody. So please pay attention, listen to watch the video till the end, understand. If you have questions, go in the comment section and comment, ask your questions, and I'll be readily available to help. Yes, I know it may take a bit of long for you to fully understand these things, but one more advice that I would give to somebody who is listening right now: don't follow many mentors. If you have decided to follow me and make sure that you understand my strategy to the fullest. Why I discourage following many mentors, it is because it brings discouragement. This is one of the things that actually costed me a lot in this forex industry. You find that today I watch maybe a video of inspiration of somebody, then immediately I begin to search what strategy that person is using, and I'll come across maybe the video, or maybe the PDF copy. I begin to read, then I begin to focus in the strategy of that person. Then you find that maybe after a month I'll meet another trader who inspires me, who have instantly inspired me. Then I begin to switch immediately. I begin to listen to them, I begin to follow them, and I meet another one, because there are plenty on internet. You find plenty of YouTube videos, you find photos, images where somebody is posting the account being in blue, and you are taken. Why? Because money is a figure. In the moment you see that, you are taken already, and you find that the strategy you learned in the first place, you bury it, you begin to embrace and work on the current strategy. When the other strategy comes across, you jump, you start again following a different person. And this one, I would tell you that it has costed me a lot, and I really regret for doing such moves. So it's good that you are listening to me right now. Please take this serious, and pay attention. If you are following me, listen to whatever I'm telling you right now and put them into practice. But somebody may ask a question to say, are you going to show videos where you are trading, where you are showing on the real chart? Definitely, I'll upload those videos. This one is first I want you to understand, so that even as I'll be pointing to say this is what I was talking about in the first session we had, you already have an idea. Okay, so let's get into the game now. So we've been looking on timings, and timings are things which most people they don't even consider. Most people they rush going to the setups without understanding timing. I can assure you, if you understand timings, you are ready to be called a forex trader, because if a forex trader, you need to understand timings. Okay, you need to understand timings, because it is timings that we combine with the market behavior in order for you to know which direction the market will take. So yeah, quite all right. There are a lot of technical analysis that you apply, but those things, I'm telling you, those things alone, they don't work. Why? Because you need to understand timings. If at all they've been working for you, it's been betting. I would put it betting. Why? Because there's something that I've understood about Forex. Forex, it has a behavior. So you find that 10 hours every time 10 hours there is a way the mood is. 15 hours there is a way the mood is, and that mood, it doesn't matter whether you apply a proper technical analysis, you apply whatever you apply, those moods, they don't respect those things. Okay, get me right, I'll repeat again. You can apply your technical analysis, you trade, but if you don't understand the timings or the mood of the market each time when it's 10 hours, if you don't understand the mood to say, when I see this mood, it means this. If you don't understand those things and you want to rely on technical analysis, you will end up saying Forex is a scam. You end up saying Forex is a scam. But I'm here to tell you that this business is real, but you need to understand the real things that happens behind the scene. Okay, so now those moods, they are actually caused by what we call the dealers, or market liquidity providers. Yes, so those ones, they are the ones that causes those moods at each time. Okay, so I've been explaining about the market sessions. You need to understand these things. Sorry, the light is too bright. You need to understand these three things: the Asian, the New York, and the London, the New York session. So each here, there is a way the dealers behave. The way they behave here, it is different from the way they behave here, and the way they behave here, it is different from the way they behave here. And the market tells us their moods in each sessions. The last video that we looked at, this one, I remember we concluded it. I said this one is the accumulation phase of the market. Then this one is a phase when the market dealers begin to behave in certain ways. Then here it is also different from the way they behave here. Okay, so now get me right. So Okay. So this one is an Asian session, and the market is moving like that. Okay. So here there are certain behaviors in which these dealers behave. There are certain moves, and those ones we call them the market cycles or market structures. Now, last time I remember I was explaining to say there are three different ways in which the market behave each time when it leaves the Asian session. So you find that the market, it will come down here, then it will respect this part, it will turn like that. Then there are also time when it will go like this, it will bypass here a bit, then it will turn like that. Then there are times when it will go continuous until the New York session. Okay. Now listen. So here is a box, it's an Asian box. So what the market dealers do sometimes, when they'll push the market, they'll push the market 3 times. Okay. Remember, they are what we call the levels, and market moves in 3 levels. You need to understand this, in 3 levels. So what they do, when they come out from the Asian box here, they'll move the market with a spike. They'll move it with a spike, one spike. They'll turn like that. They'll move another spike like that. Then they'll move another spike. So this is 1, this is 2, this is 3. And they'll move these things very fast, just immediately the Asian box. Why do they do that? 1, they want to cause fear in traders. They want to cause fear to hit you. Then when that fear comes, they know to say, if you haven't yet placed a trade, you would definitely place a trade. So after fear, then it's induction of trades. They want to induce traders to place trades. Okay. Then number 3, they would want to hit people's stop losses. Okay. So they cause fear in you, then they would want to cause you to enter immediately trades. Why? Because they understand that when the market is moving fast like this, they know that somebody who place a trade out of emotion. You get that one? Have you gotten that one? They know that you enter a trade based on emotion, and you forget about the risky or money management. So you enter a trade out of emotion, and that is what they want. So when they move it fast, immediately somebody okay, when they move the market like this, somebody will be like, oh, okay, let me pay attention again, let me see. They move it like this, then the market begin to go up. Then they move again the market like that. So now now here, people, they'll begin to enter trades. Why? Because here they were waiting, they're observing. Here they're observing, and they were like, no, the moment now when it turns now, when it turns like this, it will make a turn like this, Then here I'll enter sell, and you only find that the market goes up like that, and you begin to wonder what has just happened. Somebody is been watching me. Immediately when I place a trade, they oppose my trades. No. It's because of these things which I'm showing you right now. Okay, so they understand 3 is a psychological number. 3, it causes somebody to end up now deciding. Yes, and in technical analysis, you hear somebody will tell you that when here is a downtrend like this, you enter trades from here. And you wait. When this one turns like this, you enter trade. You wait. When this one, you place a sell here, then you're profiting. But now that's why most people have been losing money, and that's the reason why most people have been giving up in this industry. Okay, I guess you get that one. So now let me give you a strategy for you to trade the opposite to the rest, the way they trade. When you see the market like this, it moves 3 times. The third time, wait. Okay, you wait. It will go up, of course, then it will come down. Then when it comes down, sometimes it will move fast like this, then it will be rejected, then it will cross here, then this one, it will be a pin bar here, then the market will begin to shoot going up. Remember, I was sharing with you something about W's and M. This is how you trade. So the third level, you will see something like this. It will push the market, inducing more trades here for people to place sales. Then it will be rejected. Then it will form a candle here, a pin bar. It will form this candle with a short neck, a long tail, and a small body. Then the market to begin to go like that. This one immediately is a sign for you to enter a trade. And usually it appears every 9:40 GMT. When the market is like this, get me right, not always that this candle will appear 9:45. It only appears when the market moves 3 levels like that. Then when you see this candle, it's a confirmation for you to place now a trade somewhere here, a buy trade. I'm showing you something there. Please get this correctly. And when we are done with these sessions we've been looking at, put these things into practice. You trade first in a demo for a good period of time for these things to get in you, because they are a bit hard to capture. It's easy like when I'm explaining like this, but it's a bit hard to fully come to understand this. But this is what happens. And these moves, they happen on every chart you may ever think of in Forex. It's like a circle. It's like a circle like this. So now, the way the market behaves when it was here, it will go around like that. This is how it's going to behave even when it's going to come here. So this oscillation is called the market oscillation. It needs to be in your mind. Then for you to achieve this one, it needs one consistency. You put these things in consistency. I guess you're getting that one. Now, so I'm done with this one. So it will move like that. Just after the Asian boxing, it will move like that. Then it will go like that. Then here, the New York session appears. This is somewhere 9:45 here. So it will move 3 candles. Immediately when the market opens, it will move. Sometimes there are 4 candles, 3 candles, big candles like that. Sometimes it will go just like that. It closes here again like that. Here it closes. It's the same thing, or like this. It's still a same thing. When you count levels, you find the level 1, level 2, level 3. Then you begin now to look for the pin bar candle. It looks like this. Like that. Then this one, it needs to appear on the second leg of this W here. Here it can appear, but here is dangerous for you to place a buy. You wait for a confirmation for it to appear also here. But I don't mean that it will always appear also on the first leg. Here is rarely, but your signal is the second leg. If you see this candle appearing on the second leg of W, you place a buy somewhere here. This is, I guess this is clear. Then sometimes it may not be a pin bar here. It may be a big candle. It can be an engulfing candle here. But when you draw, you find that it's actually W. But here is an engulfing candle, a very big candle, a bullish candle, which confirms that the market is just, it will start going upward and it will spike like that. Look at the movement from here. It will spike very fast like that up to here. Then these guys here who placed sell orders, they are definitely caught with the spikes and they are gone. Then they place somewhere here their stop losses. It's gone. You are hearing? So if you apply these things, I can assure you, you are called a trader. Apply these things, you are called a trader. So the key thing is practicing. You put these things into practice. Consistency is one of the key if you want to become a profitable trader. So now I want to show you another secret again. Another secret again. This one happens immediately after the Asian box appears. Okay. Don't worry, I'll show you how to draw the Asian box even on the phone or on the laptop. I'll show you all those things. For now, let's look at these things. Okay. I explained in the first video something there to say I explained something. Sorry, it seems waterish. I was trying to make it easy for me to love this thing. Okay. Okay, let me do this. Okay. So here is an Asian box. It's waterish, no wonder the marker is not really okay. So there are times when the market will respect this part here, the down of this is. So what the market will do, it will come like that. What's happening with my marker? Okay. So the market, it will come like that. It will come here. It will respect this line, it will go up, then it will come again on this same level. What's happening with my marker? Let me draw it somewhere here. Okay, so the market, it will respect this part here. It will go up like that, it will come down again, it will respect the same part, it will go up, it will come down again to respect the same part, then it will go up. When you see this, the market touching the low of the Asian box 3 times, it is a confirmation for you that it will spike up. It will take long. It can take even 3 hours, even 4 hours. It's just going up. So you place your trade somewhere there. I'll repeat this again. You see the market coming down like that. It hits here, maybe to form a pin bar here. Then it will go up again. It will come down. It will form a pin bar here. It's respecting the down side of the Asian box. Then it hits again. If it's hitting 3 times, or let me say if here, let's say M here has been formed, right? Here M has been formed. Then you find that for example, you placed your trade here. Then the market goes up like that. Then it comes down again. Then it failed to cross here. It has turned here. It is a confirmation for you to place more trades, because this market, it will go crazily up. You are hearing this one? It will go crazily up. Okay, then you may find that actually sometimes you may find that when you've put the moving averages, let me explain something on the moving averages, even as we proceed with this. So the moving averages on the chart, the moving averages we'll be using will be 5 EMA, we'll be using 13, we'll be using 50, we'll be using 200, we'll be using 50, 200 and 800 EMF. These ones are the moving averages we'll be using. Then most of the time you find that sometimes this pin bar here, it will appear on the 200 moving average. When you see that, it's a confirmation for you to place trade without fear that the market will go up. Why? Because the dealers, they respect the 200 moving average. Is that clear? So I think I've explained something there. So sometimes it may not be a W just like that, then it goes up like that. Sometimes it will be a triple W with 3 legs, leg number 1, leg number 2, leg number 3, like that. So when you see these points touching all of them on the lower of this line, it's a confirmation for you that the market, it will go crazy up. You can add more trades. If you had bought, you can add more trades. And the opposite is true. If it's M like that, it appears here, it's a confirmation for you that the market to go down like that, to come and meet the New York session here. You are hearing me? Now, not every time you may see M appearing just immediately the Asian box. They may not appear each time immediately after the Asian box. Sometimes it will appear maybe around 10 hours. Sometimes it will appear around 11 hours, around 13 hours. So if it didn't appear 9, 10, just know it will appear anytime. Even 11 hours it will appear. If it won't appear 11 hours, it will appear probably in the New York session. And this is the advice that I'm giving you. Please don't place trades because on that particular day you don't want to cross it without placing a trade. You don't place trade based on you didn't make money on that particular day, but place trades when the setup has been given to you by the market dealers. I'll repeat that one. The problem as traders make, you place trades because you just want that day not to pass you by without placing any trade. That's an error. There are times myself I don't place a trade, maybe in 2 days, in 3 days I don't place a trade. I don't place a trade because I didn't make money on that particular day. I place a trade based on my strategy. So if my strategy is not giving me a signal, why do I place a trade? It's an error. Okay. So okay. So for today, we'll end here. Remember, we still have many days to come. We'll be looking at one by one, just like that. Put these things into practice. If you didn't understand the video, pray it consistently until you understand everything. If you have any question, please feel free to hit the comment section and I will respond to you. Thank you.